Hello, everyone. Thank you for joining us this afternoon. If we haven't met before, I'm Alex Norman. I'm the co-founder of TechTO. I'm an operator with 2 exits, done professional services, and I'm an active investor as a partner at N49P. We host Founders on Funding to help demystify the fundraising process and the relationship between investors and founders. Today, we have a very special episode with Alex Baker, the managing partner at Relay Ventures. Alex has a long and interesting career in the business world that I'm really excited to dive into. But before we do, a few people that are joining us live, a few ways to interact with us. One, so you haven't noticed over there, we have chat. Go in there, use the new GIF tool. You put comments, tell us where you're from, but interact with the audience and the community. Second of all, if you have a Q&A question for us, there's a Q&A tab there with that little question mark. Put the questions in there and we'll weave it in today's conversation. And if you don't want to be expressed with words or GIFs, you can use the emoji cannon to provide some feedback. So I've noticed there's quite a few Alexes involved in today. So we should have like a generic Alex GIF, I think, if the team wants to do that. Finally, stay after the main event to network with the community. And if you get some great tidbits of knowledge, share it on social media using the hashtag TechTO. Now we got the rules of engagement out of the way. Let's get started. Alex, could you please join the stage? Alex Baker. Let's just make sure we get the right Alex. So as we wait, maybe we'll talk about some of the exciting things going on. Alex is having technical difficulties, which happens from time to time. People have asked, Leah's asking me to share some of my investment background. So right now I'm investing out of N49P. I'm in an earlier stage than Relay Ventures and Alex Baker. And I've never seen a fundraising market that's more hot but fragmented at the same time. So maybe we'll get into this a bit later, but if you're the right founder with the right idea and a bit of traction, it's extremely easy to raise at a high valuation. And for the 98 other percent of the founders, it's extremely difficult. Doesn't mean they're bad companies, just means that the market's being extremely picky in what it invests in. So it's pretty interesting out there. Thanks, Alex. Thanks for joining us. We're going to have to freelance it all the time. Alex, thanks for joining us.
Thank you very much for having me. It's really a pleasure to be with you.
So I'm glad you could join us. I assume you're in Toronto right now.
I'm in Toronto, and luckily enough, I'm actually in our office. So we've opened it up to three people at a time, and I've been fortunate to be able to take advantage and get out of my house. Although I love being with my family, it gives me a little bit more time to think in solitude.
Oh, I know that feeling. And today we may get interrupted. It's a PA day in Toronto. I'm at home, and my kids love making their presence felt when I do live stream. Would love to, give us your introduction. Tell us who you are.
Okay, thanks, Alex. So, 13 years in the business. I started in 2008 after consulting for about 10 years. I joined the Royal Bank of Canada. It's kind of an interesting story. We can get into that as part of the dialogue if you want. It's a demonstration of why you always got to be prepared based on who you sit next to on an airplane. And we spun the fund out of the Royal Bank of Canada and created a group of funds that were under the umbrella of Relay Ventures. And so we've been doing this as a team since 2008. We're investing out of our fourth fund, soon to be fifth fund. We typically keep our fund size around $150 million. I, myself like to write checks anywhere between $1 million and $3 million as first money in. And as first institutional money in, I should say. I consider guys like you to be more angel focused, but we love to follow on deals that you folks have done. And then we try to maintain our position over the life cycle of the investment. I can share with you guys also a couple of examples in both the Score and Ecobee, which we recently exited, as well as Kira Talent, of how that strategy has worked out for us. It takes a long time, but it's paying some dividends right now.
So I want to go back to score and equal in a bit, but there's a lot you just said in your introduction. So I'd like to
Yep.
maybe double click on a few parts. So tell us about that transition and that, how do you go from Bearing Point and PwC being consultant to being a
So
VC? So why
it,
did that
it, it,
happen?
it's pretty interesting. So in 2008, like, first of all, for everyone on the call now, I'm sure that you have a deluge of emails that come in every day of Substacks and newsletters and everything else in the world that's telling you about venture capital. And I can tell you that in 2008, venture capital in Canada was a relatively nascent business and a relatively nascent industry. And I know that because after I finished sitting next to Kevin Talbot on a flight for 5.5 hours and talking to him about what he did and about what I did, and him saying, if you're interested in venture capital, come in and see me. He was running the Royal Banks Fund at the time. I couldn't find a stitch of information online, not a stitch. And so I did my research. I found a couple of venture-backed companies here and there, particularly ones that were in the financial services space, and I continued the conversation. It took 4.5 or 5 months to finally get to a place where we were both comfortable. I probably was there after about a month and a half, but a lot of research on my end, a lot of picking up the phone and calling investment bankers and private equity guys, and basically getting to a point where I felt like these jobs were almost impossible to get, and that I ought to just really push to pursue the opportunity. And that's how I got involved here. I sat, literally knew nothing about the asset class. I sat next to what is now one of my partners on a flight back from San Francisco, and my mother always told me, make sure you're wearing clean underwear. And so I guess I guess that's a I guess this is a good example of why you should be doing that.
So always be prepared is I guess another way to say
Exactly.
it.
Exactly.
Um, and tell us a bit about the switch. What's the biggest difference? You've been now venture capital for 13 years, so maybe it's second nature, but what was the biggest switch in your day to day? And and for most people, like they get these substacks and stuff, but what is being a venture capitalist like? You're 13 years, you're probably one of the more experienced ones in Canada. So what
Yeah.
does that actually mean and what's the role?
Okay, so I do feel like most days it's the luckiest job in the world to have. I will say that. I mean, of course it's prejudice, but I consulted for a bunch of years. I worked at the company that managed the Air Miles program straight out of school. Like I've worked through a bunch of organizations. It is one of the most privileged seats to be in, and I can give you the reasons for that. Like number one, I'm forever meeting people that I feel are smarter than me in many different capacities. They could be more articulate than I am. They could be deeper in a topic than I am. They could be better operators than I am. There's a whole lot of things that I can learn from other people. Naturally, I actually gravitate towards in-person meetings versus deep research, and I feel like I can learn a lot from other people, and I do learn a lot from other people. And I also feel like in consulting, these were 3 to 5 month projects or 3 to 6 month projects that terminated where you didn't really have an idea of what the outcome was going to be. And even if you went back and looked 5 years later, the outcome was muted by everything else that was going on in large banks. At Air Miles, you could see in the job that I had, which was very junior, you could sort of see momentum and progress in the company over time. But again, that was 4 years. It was my view was limited. It was from the bottom up. And now, we're involved with companies for anywhere from like 6 to like 15 years. We get to know the management of the company. We get to know the CEO, the other board members at the strategic level of the company that, there's not another industry in the world where you could have such a broad view of what's happening, right? It's not just, by the way, it's not just one company. Like, so I don't get to just to do it in one company. I get to do it in, 8 or 9, and I get to do it in 30 across the portfolio. But
It's
it's
impressive.
also, like, I'm sure you feel the same way. It's also an extraordinarily stressful job because there's inevitably a conflict between money and personality that comes up almost 100% of all deals. It may not come from the founding team. It may not come from the CEO, which you would think it might. It may come from a co-investor, but it's going to come from somewhere or something at some point. And that's what makes a job. Also predicting the unpredictable is I also find to be quite stressful at times.
So let's talk about predicting the unpredictable. So, part of the job is that's what you have to do when you invest in a company. So I'd love for many founders here looking looking to get money from you to know how you evaluate companies. And I'll wait. Looks like we're having technical difficulties again. So maybe I'll start with like my rubric, or where you see most where I see most founders or most VCs look at. It's a mix of team, market, and execution. And when you're early on, it's really all three of those are hard to see. You can see the team's track record individually in the past and see what they've accomplished. You can understand their insights into the market, and traction. You're trying to see what they've done in customer development or what they've done with the initial product. But when Alex comes back,
I'm back.
yeah, you're back. So as I was saying, I don't know if you heard, I'd love to see when you look at a company and you try to predict the future, how are you evaluating them and how are you valuing those opportunities?
Let's separate this for a second, because like the valuation is it's an impossible thing right now.
Okay.
Like I'm sure you're seeing the same thing where
Yeah.
seed deals were $500,000 to $2 million 2 years ago. Then they moved like it just the average seed
Yeah.
deal is getting done at $4 million. Don't get any ideas, anybody out there, that this is market for everybody, but the average deal is getting done at $4 to $6 million at on an uncapped note, or at somewhere north of a $20 to $25 million pre. It may or may not be enough cash to get you to the next round of financing. And it may or may not be appropriate to get you to the next round of financing in terms of where the valuation is going to be. So let's park that for a second. You talked about team. There were three things that you mentioned: team, execution,
Team,
and market.
market. Yeah. Yeah.
Look, we have to place bets on founders. We can place a bet on an idea, but the ideas change over time. The markets change over time. The markets are what we have the least control over. The team is what we have the most control over. Not control as a investor. I don't mean it
Yeah.
like that. I control over our decision. And the best teams navigate markets in a way that others can't. And they create products, and they create positioning that just help them dominate. And they have an attitude about them where they can step on the throat of the competition, and they understand how to do that. That's what the best entrepreneurs know how to do. So I would say, and I would love your perspective on this, but I would say at the seed stage, we're like 85-15 ratio. It's 85% about the founder and 15% about the idea. And the idea
So,
is around market and execution, right?
yeah, and yeah, it's interesting because everyone said, like, there's a few people say that you have to have a right market, because a market, a shitty team in a good market makes the returns, and lots of people say the best team can make any market work. And I personally tend to agree with you. It's on team. I'd love to hear, maybe using some of your past examples, what are you looking for in that team, and how do you see it early on? So maybe going to some of the companies you've mentioned, or maybe some you've recently, like, what are, like, you talked about the ability to execute, or the ability to, like, I guess what I'd say, take customer development and learn, because that's, because they pivot, for lack of a better word. So what are those metrics or what are those characteristics you're looking for in a team? And can you give us some examples to make it concrete for the people listening?
I will give examples. I wish I prepared a
Yeah.
canned answer for this, because I don't think that there
Sorry.
is
No.
one. Right? No. I don't
Okay.
think there is one. Every person is different,
Yeah.
and the interaction with every person is very, very, very different, and their needs from the fund all differ, like it does with you, right? Some people just need sometimes a shoulder to cry on. Sometimes they
Yeah.
need somebody to be happy with them. Other times they need introductions to other venture capital firms. Other times they need introductions to the commercialization aspect. Other times they need introductions to other executives inside the network to improve themselves. So, and by the way, my least favorite word in this business is coachable. I just don't like what kind of coach am I? Like, I never really played the game. I can't really be a great coach. I'm not, coachable is like the worst term
So
that
then when
VCs
when
use.
when people when people say coachable, what do you think they mean, or what do you like? What are you looking for
That
instead of
the
coachable?
CEO will listen to them and execute against the strategy that they are suggesting. That's what I mean. That a VC thinks that they can do the job from an armchair, and we cannot. We are not in the day to day. We don't know what's going on with the team. We don't understand how the Great Resignation is impacting their business. We do not understand how they can keep people interested in the momentum that is coming versus the momentum that exists today, and keep people on the ground there and like all working towards the same mission. We just don't get that because we're too far removed from it. So, what am I looking for? I'm looking for somebody that, like, when I've got an objection to something or I'm supportive of something, they're giving me a different perspective on it. It doesn't mean that they're defensive. It doesn't mean that
Yeah.
they know the answer. It doesn't mean that they're quick to respond. Like, I, I want thoughtful answers. I want someone who might come back a day later and say, we thought of it this way. I want someone who doesn't object to objections and discount where the objection is coming from. And I want someone who's willing to like dig deeper and say, you got to tell me more about what you mean, why you're saying that, what place is it coming from, and have it as a dialogue. That's what I look for primarily. If the ideas inside of a segment that we're, or a thesis area that we're interested in, and the founder is a good fit for my personality, then we're going to get along sometimes. We're going to want to beat the crap out of each other sometimes, but we're going to leave those opportunities when those times when we've sat across the table and wanted to throw water or coffee or something else at each other. We're going to go out afterwards and change the topic, but we're going to have a
Yeah.
mutual respect. Sometimes
So
it doesn't
so
work.
I so I like that definition. Like I think it's right because I think people might say coachable, but I think what you're saying is someone that's open to ideas, but they will think back and have the confidence to push back or explain an alternative view.
Like,
Um,
don't you think you've learned more? Don't you think you've learned more from your CEOs that you've invested in than any business school class that you took?
oh, well, definitely. I learn more even talking from the companies I haven't invested in, just because I like. There's look, you only can write so many checks, and the best. Like I think again, I think being an investor is a very privileged place in life, especially early stage, because I'm constantly learning. It feeds my ADD and desire to learn. So I completely agree with you. Um, but I actually want to go back to one of the things you mentioned. You do look for is positioning, and I think why do you look for that, and how do you know someone's good at that? Because I do agree. I think many failures I see is founders don't know how to position their companies, and so
The
I
other,
love.
I'll tell you, you want to know something, Alex? Like, the other side of it is those guys that are great at telling stories often don't deliver either, right? So
Okay, so
it's a happy medium. So it's sort of like, I don't know, positioning to me is that it's thoughtful. Actually, I'll give you the best. Here you go. For my best personal deals, Greenlight, which is, when we invested in it, a debit platform for kids. Debit platform for kids. 5 words or less. Uh, 7 shifts based out of Saskatoon. He's been on the show before.
yeah,
It's a shift scheduling platform for restaurants. Wow, that's easy. Touch Bistro. Okay, it's here. It's a point of sale for restaurants. We could point of sale for restaurants. 5 words or less. Like, I could keep going, but the companies where I can explain what they do in 5 words or less that doesn't sound complicated to the end buyer are the ones that have the positioning right and succeed out of the gate.
interesting. And did they have the position clarity when they met you?
Yeah, and you want to know what my initial feeling off it, my initial anxiety with those companies was? It's too simple. Like, we're looking for overcomplicated ideas in underserved or uninvented markets. So what are they doing that's so like? Why are they simplifying it? Well, it turns out that that's what the people that want to buy the product need. A simple message so that they can go tell their friends that they just bought a debit card for their family on greenlight.com. Wow, that's simple. I just switched my point of sale provider for my restaurant to Touch Bistro. I happen to use the same shift scheduling platform that integrates into them, and it's called 7shifts. Like, how simple is that?
Hmm.
So I work a whole lot with companies and say, I need to understand what you do in 5 words or less, or what you want to do in 5 words or less, because I think that that's a good benchmark for how to establish product market fit.
I love that. And so maybe go deep on one of those companies. So why'd you back them? What's the journey been like, and what's the lessons a founder can take away from how to interact with a VC or just generally building their company?
Okay, so let's use Jordan
Okay.
from 7shifts as an example. And I was just out with him yesterday. I hadn't seen him, by the way, in like 2 years. That guy's unbelievable. He's thoughtful. He's methodical. He's like persistent, but he's not in an obnoxious way. Jordan was introduced to us through Alex Barati, CEO of Touch Bistro. He was coming from Saskatoon to Toronto to meet with the company in order to get integrated in their platform and be able to grab information before APIs. It wasn't APIs were a thing, but they weren't a thing for all companies. Companies were not platforming themselves. They started, right, but they were,
Yeah.
so you needed special access and this and that. So Jordan came to see us, I don't know, 100, 150, 200 restaurants using the platform. His unique perspective into the industry was that he worked for his dad at Quiznos, and he used to have to do the shifts. And those weren't complicated shifts, but he still had to do them. And people were swapping and they were doing this and they were doing that. And he
Yeah.
wanted to take that, he wanted to take the manager being the center point, and adjudicating who gets what shift, and put that into software. And I said to him at that point, like, Jordan, we obviously know the space. We love what you're doing. You got to come back though when you show a little bit more growth and understand who you understand who you're selling to, but how you're selling to them. He came back 2 months later. He was back in Toronto. He was up to like, call it 300 or 400 restaurants. By the way, the numbers I might be lying about. I just
Yeah.
can't remember.
But general
Order
direction.
order of magnitude, right? I think by the third visit, and I was like, I quite enjoyed dealing with him. Again, he was persistent. He wasn't obnoxious. He wasn't demanding. Like, he didn't even try to create a false sense of that I was missing out on something. It was just getting to know the person. And at one point, my partner John Albright turned to me and said, "Well, like, are you going to do something?" So, so I was like, "Yeah, we're going to do something, right?" I sort of needed that last kick in the ass. I mean, this was like, 6 years ago, 5 years ago. So I think, my confidence has changed a little bit, but that was, and it's a team effort here. We build consensus with one another, and we go after it. But so what is it that Jordan had that's special? I couldn't bundle it, but I can tell you that what I tell other portfolio companies is, when Jordan wants to go hire a new executive, he will meet with 9 to 12 people to understand, one, is the profile of what he's written correct? Is he getting everything that he needs to out of that executive? Two, does that person fit the personality profile of who could work with the other people around them? Not necessarily just Jordan, but like the overall team. And three, does that person have the ability to scale for the next umpteen years? Like, and he really looks at it that way.
Hmm.
I think the guy's unbelievable. I think that's that this company is sitting north of, God, 24,000 locations now.
Wow.
We doubled over last year. It's being done very efficiently. They've hired some incredible talent, and Jordan is very respectful of them. Like, once he's made his decision, he gives them a lot of leeway to go and work, because he's studied their role, and he studied the individual. So he gets through that kind of 3 month buffer of, can I trust this person or not?
So a couple questions here. So you first invested in 7shifts 6, 7 years ago. How's that relationship matured over time? How, has it changed? And, you know, do you double down in future rounds? So explain how this relationship's matured over the last 6, 7 years.
Well, when a company first, and I'm going to guess this is the case with you too, right? Like you might get off the cuff emails, phone calls, texts from a founder after you first invested because they want to go, right? Like it's
Yeah.
time to go. And so you build like, especially at the stage that we're at, like you build like a very close relationship with the individual. Like I'd be sitting around the table, the phone would ring, I pick it up, it's Jordan or some other CEO that has a question, and my kids want to know what's going on. Like they're eager to know, like what's happening at Seven Shifts. Like it's this big, massive company. You know, what's going on there? They want to be able to talk about it. Like I got a shirt that says Seven Shifts, so I'm picking up the phone and talking to Jordan as regularly as he wants to call. There can never be enough times that he wants to call. And that's true. I literally feel that way about every company that I invest in. There can never be enough time to have a conversation. I might not be able to give you the answer that you want, but I might be able to likely be able to find you someone who can help you. So as you add investors, as the company becomes more mature, as you professionalize the management team, you sort of there's less day-to-day interaction. But
Yeah.
Jordan, like if he's going through a financing or he's going through a strategic, there's some strategic interest for to collaborate with a third party, if it's ADP or Toast or channel partner, and he wants to understand how other companies of ours have structured those agreements. Like this is a long time ago that he started those, but if he wants to know, then he'll call, or other investors will get the call, or we'll collaborate with the three of us or the four of us or the five of us that are on the board. So it becomes a more mature relationship over time where you don't that individual, and in his case has like just done an unbelievable job growing into the role and the progress that the company has made. Unbelievable.
So do you always take a board seat when you invest?
We I like to invest with a board seat. I, it's become so much more complicated now. When you're doing a convertible note, it's pretty hard to ask for a board seat. But our value is in the network that we have and being engaged with the CEO. And so if you're on the board, there's a different
Yeah.
dynamic. You're an investor, you're an equity holder, you own part of the business, you're not a lender to the business. There's still like this different dynamic. And so, yeah, I mean, like if I do a deal, I like to be on the board.
And do you stay like so as future investors come in, do you ever leave the board or like so for example, are you still on the board of Seven Shifts?
Still on the board of Seven Shift. Look,
Okay.
we try
So
to hold our for as long as we can because selfishly, maybe good or bad, selfishly, we continue to learn ourselves, and we can continue to apply ourselves valuable lessons from one company that's at a later stage to an earlier stage. And likewise, we have a very strong network of executives that have come from Relay's past portfolio companies that have been sold, and we can help place some of those people. But you don't really know what the needs of a company are
yeah.
unless you're on the board, and it becomes a very distant relationship and much more of a reporting relationship when you're not on the board of a company.
So I'm gonna have a question but I see a question from the audience I'll bring up right now. Saman says, considering the 10-year life cycle, I guess, of your fund, what do you generally expect to happen to a company after 5 to 6 years?
Okay, what do I want to happen after 5 or 6 years, or what actually happens?
Either
Okay,
one.
so here's the deal. Like 5 years, if we're doing a seed stage company, if we sell it within 5 years, like it's great for DPI, right? You're returning some dollars back to your investors. You're generally not optimizing for that investment. So typically speaking, at a 5-year mark of an investment, we would probably be somewhere between a Series B and a Series C, or at a Series C, the company I would expect to be kind of north of $15 million of revenue at average. Sometimes like Greenlight, in Greenlight's case, they're way beyond all of our expectations. The company has just exceeded all expectations of anyone in the market, right? They are the market leader. But so let's just say 15 to 20. Look, a lot of guys would get on here and say, what's this guy smoking? Those are terrible results after 5 years. It should be double, it should be triple, double, double. I'm telling you, on average, if we get to a business that after 4 or 5 years is at 15 to 20 million dollars of revenue and going out to raise another, these days, 50 to 75 million on top of it, like, guys, that's a good business. Okay.
Yeah, no,
And the others that are like after 4 or 5 years that are sitting at 40 or 50 million dollars and still growing, are those are still anomalies. They still are anomalies because they're
cool.
probably right. The other side is they
Yeah.
could be burning 4 times what their top line revenue is because capital was easy to get and they're just buying a leaky funnel. So I don't know. Like, Alex, what do you think?
Oh God, 5 years out. Like, so again, I think I'll take this question two ways. One is yes, I have a 10-year fund life cycle, so I'm deploying most of that capital in the first 3 years. I can extend it by 2 years, but the best companies are growing exponentially, and you want to hold on to them as long as possible. So if I've got companies that are growing, my LPs and my investors want me to hold on to them because they're going to compound value before they get acquired to go public. Um, my experience, because I'm investing a bit earlier, is the outcomes 5 years are much more variable. So I've got companies that struggle and haven't survived the 5 years, and I've got a company right now that I think will do 100 million 5 years after investing in them. So it's a lot of it also goes back to the nature of the business, right? So, and I find enterprise deals or enterprise companies take a longer period to get that sales cycle done right. The first customer is the hardest. They have to get, if they're selling a, $300,000 to $500,000 contract, the first deal, I've seen the first deals take 18 to 24 months, but every deal takes less and less time. So you start seeing actually accelerating growth, while consumer ones have the challenge. They start off faster, and then to maintain the growth is a challenge.
I'll tell you, like, I don't know where you guys do the majority of your investing, but we are much better on the direct side. So if it's a consumer product with revenue, if it's a B2B product but more tailored towards SMB, the momentum helps us a lot more than sitting there and waiting for that first deal to drop and germinate.
Yeah.
But there are some amazing amazing enterprise venture capitalists out there that understand and have patience to wait for that deal.
So I have a question. Like, in this current environment, let me take a step back. It seems like you like really knowing the founders because you know it's a long-term relationship. It's someone you want to work with. You might spend all the time and find that someone acts different under stress, but this current environment doesn't really afford anyone time. It seems like every deal has to be done yesterday. So how have you adjusted, and how do you make sure you're investing with the right, you're partnering with the right companies?
I mean, it's actually the last 9 months for me have been a challenge, a big one to put new money to work because we still have this whole philosophy about we got to hold ourselves accountable on ownership because on a fund our size, Fred Wilson put out a blog the other day that I think
Yeah.
demonstrated. If nobody saw it, you should go ahead and read it. It talks about basically $100 million valuations and putting $1 million in each of them, and the power laws that will basically generate almost no return in that fund. And I think this is what people are getting caught up on now. And so it is, Alex, very tough. My approach is we have to start getting to know the founders earlier, indicating to them that we can help them find their seed financing, if not participate in it, and then have an eye towards doing the seed, the angel financing with an eye towards doing the seed. The problem is the valuations get out of hand at that point, and honestly, it's become very difficult to compete with large funds that have a seed allocation to junior people that are, well, junior is not a right way to put it. I don't mean that in a demeaning way. People with less experience than I have, who are more relevant from an age perspective than I am, that are quickly deploying capital and can make things happen very fast, because an outcome of a $500,000 check on a $500 million fund is meaningless. It's what happens after that. So how have we adjusted? So, try to look a little bit earlier, try to collaborate or participate with other funds so that we can get to that kind of $5 million investment mark if we need to. But understand that this is a portfolio and portfolios get rebalanced over time. And so that over time, I do think valuations are going to come down a little bit, particularly at the seed stage, because there's going to be a trickle effect, which is that seed companies they're going to have struggle. We've got them. They struggle to get out of the seed stage and go and raise again. And then A's. So you can get a 0 or a 1, basically coming out of a seed or an
Yeah.
angel. Either you can get financed or you should close it. A to B is that death valley where that death valley happens, because you can raise just enough money that you can get yourself to cash flow positive if you need to. And then you can have that Y Combinator syndrome where you stick around forever because you've raised a lot of money and you just don't want to close the doors. I
Yeah.
didn't answer
No.
your question. I'm sorry if I didn't
But
answer
no,
your question.
that's fine. And I think there's lots of insights there, and I think it's also explaining the difference between stages. Just cautious of time, so I have two questions I want to get to, two longer questions and maybe a couple quick hits. One is I'd love another example of a company that's worked out, an explanation a bit of the past. So you went a bit through 7 shifts and one made that successful. So choose, love to hear about another one of the companies you invested early and
Greenlight is an
okay.
unbelievable company. So debit card for families, but very mission-driven founders. The two guys are, when I invested in them early and late 40s, one of them had been through a couple of successful startups, but he was never really the CEO, and really was very passionate about the fact that when he was a kid, his dad taught him uh, how to read the stock market. Okay, that's what his passion was, and that all around him with his kids had some of his kids had gone to public school, and he saw some of the devastation in the public schools in the U.S. and understanding that people just didn't have a good sense of financial literacy. So he developed this mission, which was not only am I going to give a debit card to families, but I'm going to help kids understand what savings are about. And so this was one of those deals. I initially spoke to them and I thought, oh, this sounds simple, but it's probably worth going down to Atlanta and meeting them in person. 10 people in the shop. I met them, and they were putting like 1,000 new customers on a month. The numbers were minimal at $5, but there was some momentum. They had a group of influencers that were talking about them on Facebook, and they had some amazing CAC recovery costs, and like the guys just knew what they were doing, right? They knew what they were doing. And then fast forward that $3 million, all of a sudden we went to put that $3 million in, and there was like tons of interest. And I just said to the guys, let's restrict the size of the financing now. We've set the valuation.
Yeah.
I'm not intent on moving upwards. You can move backwards if you want, but $4.5 million is more than enough money to get you to the next stage. Let's do this. Anyone that's coming in with $100,000 or $300,000 check, if they're a big enough fund, they're going to want to do the A. Well, sure enough, the strategy finally paid off. Like that strategy that I had been hearing about, that I had witnessed with a couple other companies, it actually started working for me. And this company was pushing. And we got to a point at the C where it was $1 billion valuation. It was 4 years in. The thing was like, and still is, just powering on multiple fronts. There's multiple vectors of growth there. And what I mean by that is they've got channel growth, they've got upsell growth, they've got cross-sell growth, which they're doing, improve the product, etc. And then 6 months later, they did a $2.5 billion round. Like, this is insane, right? This is
Yeah.
where, but we read a lot about these companies that are like, oh, every 4 months or every 6 months they're out raising money. I can tell you, being on the board and inside the company, the difference between this and a lot of other companies where I think the growth is real. I think when a unicorn is today not difficult to hit. We've got twice the number of unicorns minted this year than we did last year. It's like probably well over 1,000 already minted this. Like, I don't even remember the numbers, but they're crazy. The difference is it's the round after. You can hit a unicorn. They're consistent. There's a lot of money being poured in with $150 million check. It's the round after that makes the difference, and the execution to get you from point A to point B that makes the big difference. guaranteed. So that's the big difference. That's the lesson learned there. And that is you go and raise 150 million bucks. Do not expect to take your eye off the ball. You just got to keep, it is impossible, but the treadmill now has gone from, 3 miles per hour to 5 miles per hour to 7 miles per hour. You're at 8 or 8.5. These guys don't sleep. I, I'm,
So
I text them way less than I used to. They text me way less than they used to. I used to speak to the CEO and the co-founder once a week.
yeah, so I love that because lots of people, founders, think, okay, the hard thing is I go get my seed, and the hard thing is I get A. But like for the companies that are killing it, it never slows down, and it's about execution at a bigger and bigger scale with more complexity. Hopefully, you keep it as simple as possible, but just by the nature, as you grow, it gets more complex.
By the way, you got to run parallel strategies too. That's the interesting thing that I've learned, which is almost impossible. Like you have a business, you've got to run the business strategy, but the finance strategy, well, it's the finance strategy. One component of the finance strategy is how the business is doing. That's it. It's one component. It's
So, what's
not
the
the
other
only.
components? Because I
Well,
think most founders understand this.
have you scaled your management team? Okay, and that just doesn't mean like I've hired people. It's like, have you hired people that can grow from uh, 5 to 15 or 5 to 10 or 5 to 7 that show well that you're not afraid to put in front of new investors? That's another aspect of it. Has the market defined itself? Are you well aware of what your competitors are doing? And don't tell me that what you're doing is infinitely better. Tell me why what they're doing isn't just good enough. I will give you all an example of that. Uh, Greenlight's a perfect example. Apple launched a card that is basically a debit card where you can transfer money to and from users, and it's free. Okay, it was on Marcus or whatever platform Goldman Sachs had. Scared the living daylights out of me. I said to Tim, "What are we going to do about this? Like, I'm nervous. I'm this. It's exactly what he didn't want to hear." So, so he said to me, very patiently, he said to me, "Are you kidding me?" He's like, Apple produces content for Apple TV Plus. Do you think that's any good compared to Netflix? I said, no. He's like, Amazon produced Amazon Prime at that time. You think that content, Amazon Prime Video, you think that content is any good compared to Netflix? I said, well, it's a bit better. He's like, look, Netflix does one thing, they do one thing extraordinarily well. The other guys are good enough and we'll lose some business to them. But if you build the best product and you understand your market better than anybody, and you can continue to sell into that market and grow and improve your product and strangle the competition with a better product, we're going to be fine. He was right. I
I
was
love that.
not that I was wrong, but I was you just got to understand that like if someone's launching something that's good enough, you know, for all you for all you kids out there now, like if someone's launching something that's just good enough, you got to be careful that if just good enough has enough market penetration, you're not going to win.
Yeah. Penultimate question. What should founders be aware of 2022, either from the financing stage or in trends that you see with companies? What are the things that you find interesting what you're looking for or you think are interesting trends for next year, and what should be founders aware of?
So you think on the financing side, I had this discussion. We received a term sheet for one of our companies yesterday. I was talking to one of my colleagues about this, and she said to me, "What are your thoughts?" And I said, "Look, the only concern I have is that they're not raising enough money against their valuation." And she's like, "Well, not enough money." I said, "Yeah, the problem is they could run out of money in 9 months and not 12 months, whatever it is, with another 3 months to go. You know what I mean, right?
Yeah.
But basically have enough for 12 to 15 months where really at these valuations and these amounts, you should be putting on 18 to 24 months worth of capital because you're going to have to grow into the valuation. At some point, it won't be a correction per se, like in 2001, or 2009, but there will be some compression on valuations, and the great companies will continue to grow, and the ones that struggle are going to continue to. They're either not going to get funded, or they're going to have to try to figure it themselves out how they become more efficient with the capital that they have. Like it's been a K recovery for sure. I'm sure the cases your portfolio is the same thing for ours.
Yeah.
The ones that are like they're driving hard, but if you look at a K, the bottom part of the K is bigger and longer and steeper than the top part, right? It's just the nature of how the K is. So you got a longer line at the bottom, and those companies are. I think that's we're just going to continue that way.
Well, it's interesting. I'll say in the bottom of the K, and I think I'll go back to the actual results and financing results. I think there's some companies that are actually seeing revenue go like this, but because of the K market right now, like it's something just the market doesn't like about them. They're having an extremely difficult time raising. So, for example, anyone that's still in a part of the economy that hasn't fully recovered. So, anyone that's related to like live events or or return to office, VCs are still very cautious, even if you're showing the revenues, because they don't know. Like again, we're predicting the future, and the future's extremely cloudy in those places. People are scared to make bets.
Yeah, for sure. And the industries that are or maybe we're also disproportionate as an industry. We have disproportionately invested in crypto, maybe,
Yeah.
or maybe not. We'll find out, right? Maybe not, but I mean, that trend is bad. There's so much money going into crypto right now. It is just like
Well,
metaverse crypto, like DAO, like
yeah.
just so
Found
much money chasing
if
that
a
stuff.
founder says they have a reason to be Web3, they just increase their valuation. But that's a whole other. We could go an hour on that. Last question I have for you because we're getting tight for time is how do people reach out to you? And is it email, Twitter? What's the best way?
Email. You know what? I need to commit myself in 2022 to be more like I should have been in 2012, which is like learn Twitter. I don't. I hate to admit it. I'm embarrassed to admit it. I am such a. I, I'm a juvenile Twitter. I go on there. I get lost. I get distracted. I don't even know what I'm
Well,
looking for.
they did just
Ju-
change the interface again, so that could be it too.
Oh no! Don't give me no. I don't. I deserve to get my hand slapped for this. Twitter. I never really. It was never really my thing because I get distracted too easily just sitting in the office. So I don't
Yeah.
need another channel to do that. But the good news is that my colleagues are great at Twitter, so they can give me everything that I want.
So
Email is the best.
so
Alex
what?
at Relay.
So Alex at relay.com.
No, Relay Ventures.
Okay, sorry, yeah, because I didn't come clear. So Alex at relayventures.com. So
Easiest.
there you go. And if you're watching this live, Leah put it in the chat. Um, Alex, this is an amazing conversation. I think we're gonna have you for a follow one in the new year because I've got a
I'd love that.
few people already tweeting at me or slacking me saying, "Hey, this is insightful and this is great. Thank you so much for your time. I hope you get some time to enjoy the family this weekend."
Thank you, you too. And I will say this, that I didn't say it at the beginning, but I am like envious of how, as a you guys are not really a newspaper or a journalist. You're not a journalism. Maybe you are
No,
journalists. You wouldn't call yourself that. I
yeah.
can't believe how many stories you guys break on financings.
Well,
I'm just going to say that. Like I find out about financings from TechTO and your emails faster than I find out about them from any other channel.
well, thanks. That's because, it's Leah who you met before, and another Alex who just helped execute this in Alachi. We have a small team, but they're mighty, and I really appreciate the compliment, and I'll make sure they all get hear it.
Well, I'm like, it makes me like angry. Why can't I? How come I didn't know about that? Sometimes like we knew about every deal that happened here in 2012 and 13 and 14. Now all of a sudden there's so many deals getting done. I'm like, what the
Well,
heck?
I feel like look, I've been around the ecosystem since in Canada since 2010, and I feel in 2010 you could walk the streets and know the 10 people to know, and now there's like 10 founders I've never heard of raising every weekday.
Founders and funders first event I ever went to, I think there was 40 people there. I think.
Yeah, yeah.
I'll never, ever, 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 ever forget it. I grew up with Amr Varma. A lot of you guys might know him. And Amr and I went to high school together. And I will tell you also, in high school, his name was Amar. At least that's what I knew him as.
So I
And
guess you got confidence in correcting everyone.
I'm like, right. I'm like,
Maybe we
watch
should get
out.
Armor on. Maybe we'll get you and Armor on because Armor has a fascinating story that hasn't been. I think not a lot of the people in
Oh,
the ecosystem don't know it anymore.
you know what? I'll talk about the days of him and I being in the concert band together. He would love that. He played the
Okay,
trumpet. I played the saxophone.
so we're gonna get you back, and we're gonna get Amar with
All
you,
right.
and then we'll go
Sounds
through
good.
the evolution of the ecosystem. Alex, thank you so much. I hope you have an amazing weekend.
Yeah,
For
thanks to
everyone
everybody
else,
for questions. And I like the emojis on the side. It makes me feel good. Thank you.
Awesome. For everyone else, thank you for joining us. If you enjoyed today's show, be sure to subscribe to that newsletter. Look, where we break the financings. We talk about amazing companies and people in the ecosystem. Have an amazing weekend. Thank you.